Hi everyone. So yeah, today is the day officially announced as a official YouTuber, I suppose, and in the crypto side of things. Obviously, I've been running the channel for the last 2 years and behind the scenes, faceless, obviously. And today is the day to officially kind of launch it as a proper business, I suppose. So my aim here will not change from what I've been doing all along. Provide as much information as I can for people that are looking to learn more about crypto, how to yield farm, DeFi, the whole lot. Aim here is also to hopefully avoid all the mistakes that I made. I've been in crypto for I think 8, 9 years at this stage now, and with DeFi, I have a good grasp of what works and what doesn't work, and pretty much we're going to jump into that. So, like I said, the thumbnail I suppose is borrow to get wealth. Key thing here with a lot of people instantly when they see opportunities to borrow from the market is debt. Nobody wants to go into debt, and I think you need to have a complete mind shift of what your views are on debt and how it can actually be of benefit to you. So, look, I'm not going to go massively through the overall platform of Aave. Obviously, the key thing here is you have the opportunity to supply crypto and borrow. That is pretty much the key thing here. There's no difference in like in your bank in terms of borrowing and lending and borrowing, but the key thing, I suppose, the big difference is you don't have to wait around. So in this example here, we're over on Sonic Markets. You can see here you can supply assets to it, you can borrow assets. Now we have a 5% interest rate basically for borrowing assets, which is not too bad. I think it does fluctuate massively on different chains. So over on base, you can see it's 5.6%. Again, opportunities will be there for everyone provided you know what way to set it all up. So with that in mind, we're going to jump straight over here to pretty much my own mindset needs to change approach to crypto. And I think this is one of the biggest things that most people still, when I talk to, still don't really understand of the impact it is. Most people are thinking short-term gains, how much I can make today, how much I can make in the next hour. And I think unless you're able to trade and be good at trading, I think yield farming could be the potential way to build up sustainable income from it. Now, again, we're avoiding all these risky pairs. We're avoiding massive APRs. We're not APR chasing. We're looking to build up a sustainable approach to it. So if I quickly zoom in here, I have two approaches that I like to approach overall my portfolio. So we have the slow growth approach and fast growth. Now, obviously, we have risk to rewards in both sides of these, and I think the risk to reward is something that you really have to be 100% aware of and familiar with. But again, once you kind of have a strategy, a plan built out for these, you're going to understand exactly how these can impact in your overall growth. And as I said, each approach will fit each individual person a different way. So, like as I said, fast approach is pretty much using borrowed capital, but instead of repaying the borrowed capital, we don't repay it. We just keep extending, extending, extending. Now, some people will instantly look at this and be, well, you have a massive risk here, but millionaires, billionaires make their money from debt. What happens is they borrow, and you look no further than the housing markets, probably in your own area. You have someone who will get a mortgage, they buy a house, they'll use the rent, the income from the next house to go on and move on to the next house, the next borrowed, and they will pretty much keep continuing that, and they'll build and build and build. Obviously, there's massive implications if basically the deck of cards or the houses crumble. You are going to be left with debt. So in this example here, what I want to show you is pretty much if you're looking to borrow and lend in crypto. So like as I mentioned, we're over here on base. We just use a base chain for the moment, and you can decide to borrow 5 USDC at 5.6%. Now obviously we need some sort of crypto assets in here. So for me personally, the way I would approach this now, if I was doing it, I'd have X amount of cash, whatever I can. I would more than likely buy Bitcoin. Straight away with Bitcoin, I would put the Bitcoin into the likes of this here, whereas I can borrow off the back of it. So if it's a case you can get access to whatever you can get access to, for example, just say we have access to 10,000 USDC from borrowing and lending. So we borrow our 10,000 USDC, and from there, it's going to allow us to start the entire journey and portfolio. So again, what you do is you take your 10,000 out of the lend and borrow section, you put it into your first LP. What you do with the rewards here is the key thing. So this is where it kind of comes back to our two options here. Option one is a slow growth approach. So if we're earning X amount per day, you can instantly just use the rewards, like it's marked here in the red, up here to repay your debt back, and that's it. Now, for me personally, it's not capital efficient there. It's you're using money just to repay back a loan. So even if it takes 6 months to repay the loan back, you're not earning is the key thing. So 6 months of potentially just sitting there. However, option 2 is the fast growth approach. So option 2 here is what happens is with your rewards you put it into LP2, and after a certain period of time you put your rewards from LP2 into LP3. But what will eventually happen is you will have enough funds to start generating on a daily basis where you can start obviously compounding them into it, obviously storing them back into your own wallet for your long-term holdings, and repaying your loans. Now, this is, I suppose, the key things here to remember is with the likes of Aave and your traditional banking, say, traditional banks, you would have to, obviously, a certain period of time, you have to repay it back, or you need to make a payment each week, each month, whatever the case is. With crypto and the likes of Aave, you don't have to repay it back in a period of time. You have a long time, I think, and for most of these platforms, there's no time limit to it. You just keep having the APR added to it, and obviously you get to a point if you can't repay it, it's a different story, but there is no time limit to it. So if we can get into positions that are going to protect our capital and earn revenue for us, then the fast approach is a good way to approach it. And again, over here, if you see this image here, and this is the general approach to it. So we have our own crypto. Like I mentioned, you buy Bitcoin. You unlock this value, this by borrowing and lending. So in most cases, people will buy Bitcoin, hold in their wallet, that's it, they're done. It never really grows. However, for me, I buy Bitcoin. I put it into a lending platform. I borrow off the back of it. This allows me to enter straight away into an LP. An LP is going to grow for me, which I then have the opportunity to obviously hold stable coins for the safety net, again, just the protection, reinvest, compound into it again, which again is just pretty much what I explained over here. Now, key thing here is obviously this snowball effect, and as I mentioned up above here, the mindset needs to change. So what I'm going to do is quickly show you an example here of how this would work, and hopefully you kind of understand the impact and how it all connects up. So if we jump over here to Ethereum here at the moment, what I would like to do, and what most people actually do at this moment in time, and you see them, is they get into ranges, and if we just quickly do it, they probably get into a range like this, and they do another one, and they're in something like this. And what ends up happening is that range is only a small percent, I think, is it? Yes, so it's only 2%, so they even might extend it out a little bit more to get your maybe 10%, if even that. So the key thing here, right, the chart is gone. So the key thing here to remember is that's going to have a big impact on overall what you're doing, and you're very quickly going to go out of range here. So that's one thing to remember. So what we're going to do here now is we're over on VFAT. We're going to look at wrapped ETH USDC. The key thing here is I pick pools that I want to hold tokens long term. So this comes back to your original goals, your original strategy. You need to have a plan. You need to have some sort of strategy built out for your crypto. And that's where I decided I wanted to build up something that I think can have a massive help and benefit for a lot of people. I've created this group that my focus here will be to provide as much information, as much value that can help people along the journey to actually grow their crypto portfolios, and hopefully just avoid a lot of the risks that are involved. Now, again, check it out if you're interested in joining. This will be changing. I have a few more things to add to it, but I will have guides and stuff like that for people getting involved in crypto, a bit more structure around building portfolios, building DeFi portfolios and yield farming. But again, here in this example, I'm happy to hold Ethereum. So what happens here is I've borrowed $10,000 from Aave. I've come along here to Ethereum, and what we want to do is set up our position. So this is probably where I differ a little bit now than what you'll see most people on YouTube at the moment. They will set a range of around 13%, 14, 15%. They are lovely APRs. Don't get me wrong. It's 300% or 200%, 150% APRs. The problem here is you end up having to manage it every other day. And I was one of these people that did set tight ranges. So I might have set something like this and getting 300%. But what happens is I put my money into it, and probably within a week I'm out of range. If even a week, I'm out of range and I'm earning nothing. And what happens then is it looks like you're after losing money. So my new approach to it is I'm setting much bigger ranges. So we are at this range at the moment. It's 40% width. Now, when I talk about the 40%, if we look here at the current price, and the current price is 20% to the downside. So we're going opportunity the whole way down to 3,500 for one Ethereum. And again, we have the opportunity to go up to a decent 4 or 500 or 5,000, I think, is it the other way? Yeah, so it's just over 5,000. So you can see there is a massive range straight away there that we can potentially get into. So as I mentioned, it's around there. So you're going to be earning yield through all that time. Obviously, as the price drops, what's going to happen is your position is going to be converted more and more to Ethereum. But if your long-term goals in views on Ethereum is good, then I think it's a great way to get into it. If your long-term views are not for Ethereum, but you like maybe Bitcoin, then you focus on Bitcoin. But for me, this is what I'm doing. So again, even at that, I would consider still to be a little bit higher than I want. So I might go out to that. And again, I want to get to around 50 to 60% APR with my capital. Yes, you're not going to get massive amounts on a daily basis, but this is where compounding and growth and a long-term mindset is going to make a big difference to what you're wanting to achieve and stuff. So if you jump over here, I've created these few tools a while back. Just helps me kind of calculate a few different things, scenarios, and again, just helps me understand a bit more about the different, just crypto in general. So if you're interested in getting the link to this, it's pretty much, as I said, it'll be inside the group. As I've talked about here, this is some of the stuff that I will be adding to the group on a regular basis. And, well, they're already there. And I will be looking to do weekly calls, live calls to kind of work through questions and stuff like that. But back to the video, if we jump in here. So what we want to do then is, if you look here, we're going to put in roughly the 10,000 we borrowed. Our interest rate is 60%. We're going to compound it daily, but we're only going to do it for 1 year, just to show you an example. So you can see here you have two amounts. Obviously, your 10,000 is going to be worth 16,000. Your average income, obviously, per day is worth $16, is what you're going to work out at. So at the end of the year, if all you did is compounded it back into it, you're going to be pretty much earning. So if it's a case you don't if you don't compound it in, you just take the 16 euros, you'll end up with a total of obviously roughly 1,600. If you compound it in on a daily basis, at the end of 1 year, it's 18,000. Now, not in major, not in extreme. However, we've nearly doubled our money already within a year. So again, at the end of the year, you got up to 22 euros a day, or $22 a day. However, we decide we're thinking longer term game. So again, we're going to do this for 5 years, again, compounding roughly on a daily basis. Now you can see the difference it has. So again, for the 5 years, you could just take out your 16 euros every single day, roughly, whatever it is. And every single day, what's going to happen is you're going to be earning, and it's going to be total interest is going to be 30 grand you're going to make. However, if you compound this at the end and you compound it for the next 5 years, it's going to be worth 200,000. And on that 5th year, the start of the 6th year, whatever it is, that amount could potentially be earning you $104 a day, 3.5 or just over 3 grand a month. Now, look, people are going to look at this and going to be like, look, it's not realistic. You're not going to be able to do this over 5-year period in one position. I understand that 100%. However, the key thing here is you need this. You need a mindset shift. You need to change this. I think this is going to be the big thing that's going to benefit a lot of people, and the ability to kind of understand how this is going to impact you, I think, is going to be unreal. Yeah, so look, hopefully you enjoyed the video. Hopefully it added a little bit of value to you, your overall, what you're trying to build up. Again, definitely, let me know in the comments if you're interested in learning more about this stuff. And as I said, I think it's an opportunity here for everyone, not just a certain few. You don't need to have hundreds of thousands in crypto to try and make money in it. You just need to get some sort of system built, strategy built, and have an understanding of what your long-term goals are. Because like crypto, as you can see from the charts, it goes up and down. And as I said, if you get sucked into the entire emotion of it all, it is going to become really, really hard to see what's happening. So look, we're going to leave it there. Thanks very much for watching, and I hope everyone has a great day.